Hey guys, Taylor with GammaEdge here, coming at you with a market recap for March 25th, 2025. Gap and chop has been the theme lately, and that continued again today. But before we get there, let's get into our pre-market routine real quick. So here's our market trend model. This is our way of simply gauging trend and momentum in the market. It's built off the tick index, which is a direct measurement of buying and selling in the market. You can go look at Investopedia if you want to learn anything further, or we have a dedicated lesson to this in GammaEdge Framework free flagship course. Anyways, coming in the day, we had a nice trend higher in the short term. That is the cumulative tick itself, which is just a tick index that we create into a time series day over day. Then we apply just kind of 3 simple moving averages to that. So again, at the close yesterday, this did finish higher than the day before, extending higher. This is what we call a trigger day. Its current day closed below prior day. This also turned on our P2P strategy, which is our 100% mechanical strategy. Posted about the other week, but significant outperformance to SPY on various different time frames. Nonetheless, in the short term, we were optimistically bullish. Next step is going into looking at the options market structure itself. Here's the SPX A structure. Again, we separate SPX between the AMs and the PM settled. AMs is your monthly and your quarterly, so it's kind of slower moving money. We think of it more as kind of institutionals are playing there. So it's kind of the super tanker, where SPXP is more of the cigarette boat. Anyways, day over day structure was improving. Looking at the net delta column, we're starting to see calls come back in below spot price, above spot price. We're starting to see a bit of thawing as well. That is calls coming in the place of puts. So this complex is still put dominated. However, it is lessening day over day, which is constructive to see. Next, moving to SPXP complex. Again, PM settled. This is where your 0DT resides. This is where your weekly expirations reside. Again, this structure flipped to call dominated, which was constructive to see. Above and below spot price, call dominated, starting to thaw out really, below spot price, call dominated. Above spot price, starting to see some call speculators come back in. And we also were above the GEX transition zone, and we're starting to get into the DEX transition zone. So that, again, is constructive to see. Before moving on to 0DT complex, 2 other things we want to show you in the context of sentiment is first our GEX ratio. GEX ratio is simply just a measure of call gamma relative to the put gamma in the options complex. You can think of this similar to the basic put call ratio. However, we think this is superior. Reason being is because it's built off of gamma, so there is an inherent time component to it. So this gives more bias towards short-term positioning, as opposed to, you open 1 million contracts 2 years from now. That's going to make the put call ratio, spike like crazy, but it's 2 years from now. So it doesn't necessarily have a immediate impact on a short-term traders. So we could see that this has been trending off the lows made a couple weeks ago. So again, this is constructive to see. We want to see this continue to progress higher with price, which indicates to us that calls are coming back into the complex. And here we are with SPX 0DT structure. Our key GEX index transition zones were at 5750 to 5745. So again, within the transition zone is where we expect to see some congestion. We expect to see some chop in the markets. Above the top of 5750, this is where we start to get into a call dominated environment. So we expect a natural lift higher, just purely out of structure and the moneyness of calls and puts overhead. Then same thing to the downside. Below 5745, that's where the bears start to take control again. That is the put speculators in the complex. So in addition to that, we have something called the drunken sailor range, which was 5800 down to 5720. And simply put, when we get to the upside of the DEX or the GEX transition zone, but within the drunken sailor zone, this is a moderately weak bullish environment where intraday volume, the 0DT contract can still push price around a good bit. So this is an area where it's, yes, we're bullish above, but we want to see the volume confirmation, which we'll get into in a little bit, confirm this move higher. And ideally, we get above 5,800, and then that's really where the call dynamics start to come in. So here's today's price action overlaid. We have the drunken sailor zone, which is this big teal box here. And then we also have our DEX and our GEX transition zones, which is this purple box right there. And here today was just a simple, meandering within the top of the drunken sailor zone above the DEX transition zone. We were never able to really get the volume move higher to take out the top of the drunken sailor transition zone. Really, we more or less oscillated around the opening print today. So you keep hearing me talk about volume. What exactly is that? So GammaEdge, we focus on intraday volume for the SPX 0DT complex. Pairing that with the market trend model, that gives us a very good feel in the day of how speculators are transacting. There's 3 states for the call and the put side of things. Calls can either be speculating higher throughout the session, flat on the session, or lower on the session. And same thing for the put side. And so what we do is on a 5-minute slice by slice throughout the session, we aggregate all volume. We determine where the center of that distribution is, which is called a centroid, and we plot that. So there's every 5 minutes, we plot a new dot, and then we connect those dots for you. And then we just do a simple linear regression through those dots as they become available to us. And the thought there is all things equal, if those speculators continue to act in the manner that they have from the open through whatever time period we're at, then they're going to continue down that path, and we can kind of project out what that is going to look like. And so today you can see this is a standard choppy signature. By that, we mean the put side is trending higher all day, the call side is trending lower all day. When we see trend days higher, this is where we have call speculation ramping higher following put speculation. Same thing on the downside, we have put speculation ramping lower with call speculation following as well. But clearly you can see today was not that. And so just using this as an example, here is what the tool looks like, which was at 1:10 p.m. Eastern Standard Time. So we have all the centroids plotted from the open until that time here. And then again, our linear regression line goes down there. Same thing, put side down there. So what this is saying is if the calls continue to act in the manner that they have been throughout the session, which is generally trending lower, then okay, spot price is going to follow that. Same thing to the upside of puts. Speculators generally act in this manner, then they're going to pretty much trend this way through the end of the session. And we were projecting it in right at 57.70, something like that. We ended at like 57.75, 57.76. So spot on pretty much. And again, you can see the utility as tools, especially if you know you're a credit seller, starting to see choppy price actions. You can kind of understand where those kind of upper and lower bounds are. And then again, just coming back to the price action itself and our zones, hopefully that makes sense. We're within the drunken sailor zone. We're seeing choppy price action volume wise. So today is probably going to be a choppy day. And right, we're simply just using just a handful of tools to kind of understand what the bias on the day is and to give us high probability trade ideas. Looking at a couple of the Mag 7 components now, here is Tesla. Again, Tesla's structure has really improved over the last day, over the last week. Here we can see we're above the transition zone, which is 275. Sorry, we have plus GEX with the strike with the most call gamma at 300. You can think of this kind of an upside short-term speculative target. Reason being is there is a ton of short-term speculation here, hence the largest gamma strike. So the thought here is once we get to 300, this is a natural profit target. Reason being is, the speculators who put their position on, which was out of the money at the time, they've now captured all that out of the money risk. Those contracts are fairly valuable where they put them on there, so they want to lock those profits in. And again, going to the chart here, this is just a script where we have our levels here. 275, you can see that was clearly respected intraday, and then we got a nice push higher. So again, 275 was a great level to be trading against. Just going around the horn here real quick, here's NVIDIA. Again, you can see it respected its P-trans level all day, which again, P-trans is just the top of the transition zone. So if you're bullish on a stock, you want to see it above this level. Here's Google yesterday, finished right at its P-trans level, again, gapped up today, then went right to plus GEX and was really pinned to plus GEX all session long. So from here, what we want to see is we want to see this plus GEX level shift higher, which indicates that those short-term speculators are now putting their money higher up as they're expecting further price appreciation. So with that, appreciate the time. Hopefully it makes sense from our pre-market prep, SPX 0DT trading, and then how we apply this same framework to individual stocks. If you want to unlock more about what we have to offer, down in the description section, we have curated playlists for you. And then on our website, GammaEdge.us, we have 2 free newsletters, a pre-market and a weekend educational piece. And then we also have multiple free courses, including GammaEdge Framework, which is our flagship that teaches you the entire process for free. So with that, y'all have a good night. We'll see you tomorrow. Thanks. Bye.